Good afternoon. Welcome to the Weekly Livestock Market Update. I'm Brownfield anchor reporter Megan Grebner. With us is University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
We're going to talk a little restaurant performance. We're going to talk some jobs and a little bit of trade as well. But to get things started today, let's talk about and recap what happened this week in the markets.
Yeah, if we start on the cattle side, live fed cattle this week were up nearly $2.50, so a nice increase in cash prices for fed cattle this week. Feeder cattle sold steady to $4 higher for the most part. If we look at the future side of the equation, the live cattle December futures were down about $1.40, while the January feeder cattle contract was basically unchanged for the week. Moving to the beef side, the choice box beef price was up $5.22, and we saw strength across the board in terms of those components of that choice box beef price. So both a good week for fed cattle as well as beef prices as well. On the hog side of the equation, we saw Barrow and gilt cash prices basically unchanged for the week. Looking at that December lean hog futures contract, it was also basically unchanged from where we stood a week ago. The weekly pork cutout value was down $1.40. We had weakness across the board in all components on the pork side, although belly prices sure led the way, being $3.80 lower this week.
Scott, as we take a look at the hog market specifically, it's been an interesting couple of weeks. We've seen more strength on the future side of things, but we've really seen more volatility on the cash side of things. As we talk about that, are we trading? What is causing this big separation, and what can we anticipate how that moves forward?
Yeah, so I think a couple of things that continue to be important. Number one, we've got pretty large runs of hogs coming, which I think has certainly kept some pressure on cash markets in the near term here. Yet you have things like African swine fever, where we're all trying to figure out exactly the impacts of African swine fever. We know if that continues to spread in a place like China, where more than half of the world's pork is produced, that it certainly has big implications for markets. So you can continue to build some anticipation for what could be an extremely positive situation unfold for U.S. pork prices as we get into 2019. But it's tough when we just don't know exactly where we stand in terms of getting African swine fever under control.
As we look ahead, do we also does the whole trade situation that we talked about, whether it's China or whether it's Mexico and Canada, until the trade rifts are repaired, are we going to continue to see more pressure on the cash side of things?
I certainly think as we get here in the latter part of this year, we're going to see more pressure in terms of cash hog prices. All of the trade discussions that we're having. So although a successful USMCA in the bag now, that still needs to be ratified by countries, and I don't think even here in the U.S. we're going to see Congress move to take a vote on USMCA until we get into 2019, and so I think we'll continue to have tariffs in place here for much of the remainder here, where we're going to again have very large hog runs.
Let's take a little consumer side of things. We talk about demand on the global market, but domestic demand remains important as well. And a couple of reports this week that we're really going to focus on. Specifically, let's start first and take a look at that restaurant performance index and what it's doing.
Yeah, if you look at what we got out of the report this week, the September numbers, that overall restaurant performance index came in at a 101.1. So strength again when we look at September. That is down from the 102 we posted in August of this year. A little bit of a mixed bag, I guess. When you look at the current situation index, it is up 0.6 this month in that September number. One of the numbers that are actually down for this month out of the report is that consumer traffic portion of that current situation index. It was down 1.4 points in September, suggesting slower customer traffic in a number of stores. That's a little worrisome in that, for me, that's kind of where do we sit today, and hopefully when we see the October numbers, we'll have a little bounce back there. Yet when you look at the expectations portion of the index from the September numbers, it did come in at a 101.6. So continue to see optimism about where that restaurant performance index goes as we move forward. I just remind us now we have 8 consecutive months where we've actually seen an increase in that current situation index in total. So all in all, we continue to see expansion occurring as we go here in 2018.
When we talk about that restaurant performance index, how does that relate or convey domestic demand and how it comes back to producers?
Yeah, so I think first of all, it's important to remember that this is a measure of what consumers are doing in terms of eating out preferences, and as we know, a larger and larger proportion of the meat that we consume in this country, beef and pork in particular, comes from away from home experiences. We think that restaurant performance index probably does a pretty good job of mimicking that. The at-home side doesn't get measured here, but we know that growth in that restaurant performance index certainly spells stronger demand for beef and pork.
Let's talk about jobs on the domestic side of things. I think that jobs report has to be another boost in support of strong domestic demand, or support for strong domestic demand.
Yeah, absolutely. I keep reminding us that thank goodness we've had a strong economy here in 2018, given the increases in beef and pork production that we've been putting on the market. When you look at the report we got this morning, another 250,000 jobs were added this month. That's well above the 190,000 pre-report estimate that folks were suggesting. But perhaps even more important out of that report is we saw wages that were 3.1% higher on an annualized basis for October. That's the largest gain we've seen in wages since early 2009. So more money in the pocket, I think, certainly is helpful for what we're seeing in terms of beef and pork demand.
Do we anticipate that job growth to continue, especially as we get into the holiday season and adding more jobs, specifically some of that holiday work or some of that seasonal work as well?
So I do think we're going to see that bounce as we get into the holiday season. I'm curious to watch even the wage rate side of this. As we talk about unemployment rates that are at some of the lowest levels we've seen in decades. I'd certainly expect to see additional wage inflation as we continue to try to add jobs here towards the end of the year. So all in all, we have an economy that's rolling along very nicely, and has certainly been helpful, I think, to keeping beef and pork prices higher than otherwise might have been the case.
As we wrap things up this week, let's talk a little input side of things for producers as we head into winter. Hay has been something that we have talked about all year long. Is that of concern for cow-calf producers going into the winter months?
Yeah, I sometimes think we forget now that for many of the places that suffered pretty serious drought during the summer, I'll throw Missouri in the middle of that as well. Fall growth was phenomenal in a number of places. Yet when you look at where hay prices sit, as we get them reported from USDA, we continue to see hay prices at high levels. I think that continues to spell a cow herd that doesn't build a whole lot in many of the areas where we see those higher hay prices. You only have to get maybe into the southeast part of the U.S. to actually find hay prices that aren't quite so high relative to historical standards. But we certainly see a number of the states like Missouri, Texas, Oklahoma that are seeing hay prices much higher than they've seen for a while.
How does that figure in for what are the best ways maybe for producers to, you can't do much about it at this point, but as you're thinking ahead to the next year and starting to think about those risk management tools, especially we've seen pressure on prices?
Yeah, so I think hay, is one of the hardest ones. How much hay and pasture do I need? We don't have many other market tools to try to reduce risk on that hay side. But I think we have to realize just, hay stocks are in a tighter situation than we've seen for a while. Might suggest a little more attention to those pastures early next spring to make sure we start off with some good growth, and hopefully we don't start the 2019 growing season like the year we just finished, where it was extremely cold and a slow start for grass growth in many parts of cattle country that then turned into an extremely hot situation, it seemed like, in a matter of hours. But maybe a little more pasture in the mix might be important for folks in 2019.
All right, Scott, as we look ahead to next week, what are you looking for report-wise?
Yeah, so we'll start midweek here with a monthly trade data out for us to look at, and then on Thursday we'll get USDA's monthly WASDE report. So we'll get some information there as well. And I think as we look at that WASDE report, USDA is also releasing some of their long-term 10-year forward-looking estimates. Maybe we can take a little peek into the crystal ball and see where USDA sees pork and cattle markets going in the next 10 years.
Plenty for us to chat about next Friday. Have a great week. We will talk to you then.
Sounds good, Megan.
To have our weekly livestock market delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. Subscribe. You can also submit questions and comments there as well. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner on Brownfield.